Welcome back to the Deep Dive. Today we are wading into a topic that's really had the entire crypto world holding its breath. We're talking Bitcoin's brutal, messy encounter with that huge psychological milestone. $100,000.
Yeah, it's been the number everyone's watched for years.
Exactly.
Right.
It was this dream, then it became a goal, and well, recently it turned into very volatile reality. But the real story isn't just hitting the number, it's what happened right after. The market, it definitely did not move in a straight line. What we want to focus on is that moment the price dipped and actually broke through 100K.
Like a dam breaking.
Sort of, yeah.
Yeah.
It signaled the sellers were winning that tug of war
Yeah.
right at that critical line.
And that moment was really crucial. It dropped, like you said, down near $99,000. And interestingly, it coincided almost perfectly with the Wall Street Open.
Right. And the expectation was
What?
that the big players, the institutions, would jump in.
Precisely. Everyone expected them to aggressively defend that psychological level. Big round number, lots of eyes on it.
Well, they didn't.
No. Instead of that immediate, strong bounce back people were banking on, the price just kind of hovered there. And that put enormous pressure, really concentrated pressure, on all those leveraged bets, the long positions counting on a $100 cow holding firm.
So not just a dip, but maybe something more. Strategic.
It felt like a strategically induced market trauma, not just a simple correction.
Okay, that's a pretty stark picture. So
Yeah.
before we get into the charts and the nitty-gritty, we need to grasp the immediate financial chaos that's triggered. Our mission today is to look past the scary headlines, try to figure out the intentions of the big players, and see what the deeper on-chain data tells us. Is this a total collapse, or are we looking at maybe a painful, drawn-out bottoming phase?
A crucial distinction.
Definitely. Let's start with the sheer financial damage, because when that price fell through 100K, the consequences were instant and devastating for a lot of traders. According to CoinGlass data, in just one 24-hour period around that dip, over $700 million in total value was liquidated across the whole crypto market.
700 million. Just think about that number for a second. It's staggering. Essentially vaporized from traders' accounts.
Maybe we should quickly explain liquidation for anyone less familiar.
Good idea. So when a trader uses leverage, right, they're borrowing money. Often a lot of money, 10x, 20x, even 50 times their own stake sometimes. They're making a huge bet on which way the price will go. If you bet it goes up, that's a long position.
You're essentially amplifying your bet.
Exactly. But there's a catch. You set a liquidation price. That's the point where your own money, your collateral, runs out if the price goes against you.
And when the price slams through that point, like it did here,
Bang! The system automatically closes your position. It sells everything, the borrowed funds, your collateral to pay back the lender. Poof!
gone. And the danger is that cascade effect, right?
That's the real killer here. Why that $700 million figure is so destructive. The forced selling from one liquidation pushes the price down further.
Which then triggers the next set of liquidations sitting just below.
Precisely. It's like a domino effect. The market starts eating itself, fueled by that forced selling.
So $700 million flushed away.
Yeah.
And you have to wonder, where did that money go? Likely into the pockets of the big players who knew exactly where those liquidation points were clustered.
That's the million-dollar question, or rather the $700 million question. Was this just the market doing its thing, a natural correction?
Or was this move, this sharp drop right around the Wall Street open, somehow engineered?
Which brings us straight into the murky world of market manipulation, what analysts often call the liquidity speculation game.
Okay, explain that game.
Well, think of the market like a lake, and liquidity is the water. The large traders, the whales, they have better maps of the lake bed. They know where the deep pools of liquidity are, these big clusters of buy or sell orders, and crucially, liquidation points.
So they know where the pain points are.
Exactly. They know where hitting a certain price will trigger a cascade. So the strategy can be, unfortunately, quite simple. If the price is, say, hovering just above $100, and they know there's a huge pool of long liquidations just below at $99,500.
They might push it there deliberately.
They might. By dumping a large amount themselves or using other tricks, they can push the price down just enough to trigger that first wave of liquidations.
Which then causes the cascade.
Driving the price lower still, allowing them to potentially scoop up assets cheaper in the chaos they helped create. It's about weaponizing liquidity levels.
And this isn't just theory, right?
Yeah.
There was some specific data that looked odd.
Yeah, material indicators, they track the order books in real time. They flagged something really suspicious right as the price was tumbling towards that $99,000 level.
What was it?
Just as everyone was watching, wondering if it would bounce or break down further, boom, a massive $57 million buy wall appeared on the order book, just sitting there. Looked like a huge defense line at 99K.
Okay. This sounds like the trick we were just talking about. Classic playbook stuff. You mean spoofing.
Exactly, or something very similar. Analysts are, let's say, highly skeptical that this was a genuine, firm intention to buy $57 million worth of Bitcoin right at that moment.
So why put it there? What's the point?
It's psychological warfare, basically, like a giant poker bluff on their order book. It does a couple of things. First, it can create a false sense of security. Smaller traders, maybe retail buyers, see this huge wall and think, oh, the whales are defending this level, it must be safe to buy now.
So it encourages buying from others.
Potentially, yes. Second, it can intimidate sellers. If you were thinking of selling, seeing a massive $57 million buy order waiting might make you hesitate, thinking your sell order won't even get filled or that the price will bounce hard.
So the whale puts up this huge fake wall, maybe draws in some buy orders from others, thinking it's support.
Or scares off some sellers.
And then, crucially, they pull their $57 million order before it actually gets hit.
That's often the move. They likely never intended to fill the whole order. The goal wasn't necessarily to buy, it was to manipulate the market flow, create volatility, and profit from the reactions of others. It's about making people think something is happening.
Wow, okay. That's pretty cynical, but it leads to a question. If these whales are so powerful and just liquidated $700 million from longs, why stop at $99,000? Why put up even a fake wall there? Why not push it lower for more chaos?
That's a really interesting point. It could suggest that maybe their goal wasn't just maximum price destruction, perhaps it was targeted liquidity extraction. Once they triggered that main cluster of liquidations, that big $700 million pool, maybe their primary objective was met for that moment.
So pushing it much lower might have risked something else.
Possibly. It could risk triggering genuine widespread panic selling, which might actually hurt their own larger long-term holdings. They don't want to crash the whole market, just shake out the leverage players. It's still a calculated risk, even for them.
Okay, so the picture is one of short-term, intense, possibly manipulated chaos. Let's pivot now from the whales and their games to the cold, hard charts. What are the immediate technicals telling us? Because analysts seem pretty split right now. Is this a bounce forming, or are we setting up for another leg down?
Yeah, there's definitely debate happening. On the more hopeful side, you have analysts like Exit Pump pointing to a couple of, well, weak but potentially positive signs. One is the attempt to form a higher low. Meaning if the absolute bottom of the previous major dip was, say, $98,000, and this most recent scare bounced from $99,000, technically that's a higher low.
Okay, and why is that significant?
It's a classic, though sometimes fragile sign that selling pressure might be weakening. The sellers can push it down quite as far this time.
Got it. What else are the bulls looking at?
The other big one is the Relative Strength Index, the RSI. Think of it like a market thermometer measuring momentum.
Right, the oversold, overbought indicator?
Exactly. Historically, when Bitcoin's RSI on certain time frames dips below 30, it flashes oversold. It suggests the price moved down too fast, too hard, and a bounce, or at least a pause, might be coming. And we did see the RSI dip into that territory during the 99K drop. Now it's showing early signs of turning back up. That's a potential signal that the immediate selling impulse is exhausted.
Temporarily, at least.
Temporarily, yes. They're also watching open interest. That's the total value of active futures contracts.
What does that tell us?
If open interest starts rising while the price is trying to stabilize or go up, it suggests new money, new positions are entering the market to support the move, not just old positions getting closed out. That's key for a sustainable rally.
Okay, so some glimmers of hope there. Higher low attempt, oversold RSI turning up, watching OI. But there's a strong counter-argument, right? A dose of caution.
Absolutely. And it's articulated well by groups like CRG. Their warning is pretty stark. If the market doesn't firmly establish and hold that higher low right now, then you should probably brace for another lower stab.
Another drop below 99K, maybe even below 98Ks.
Potentially. And it's not just pessimism, it's about market mechanics. The thinking is that a further dip might be needed to clean up the area below the recent low.
And clean up, meaning?
Meaning trigger any remaining buy orders or stop losses that people placed just below that 98K level, thinking it was the absolute bottom. It's about fully clearing out the weak hands before a real move can start.
So fleshing out the last bit of hope for the lowest buyers.
Kind of, yeah. Their overall take is that despite the bounce, Bitcoin isn't showing real strength yet. The buying is hesitant, tentative, it needs more confirmation.
Okay, so the short-term chart is Messy. Conflicting signals. A fragile potential bottom fighting the threat of another liquidation hunt. This seems like a good time to zoom out. Let's step back from the hourly noise and look at the bigger picture, the broader cycle. Using on-chain data, that often gives a more honest read, wouldn't you say?
I agree. On-chain data often filters out the short-term manipulation and noise. And this is where analysis from platforms like CryptoQuant becomes really valuable. After crunching the numbers, their main conclusion, highlighted by analyst Sunny Mom, is quite interesting. They're saying Bitcoin is currently in a bottoming phase.
A phase, not a point. That sounds important.
It's absolutely critical. They're not trying to pinpoint the exact dollar figure for the bottom. They're saying the market has entered a process. And bottoming phases, historically, they aren't quick V-shaped recoveries. They're often characterized by volatility, choppy price action, fear, uncertainty, and crucially, the gradual exhaustion of sellers.
A war of attrition.
Exactly. It can last weeks, sometimes months. It's designed to shake everyone out, test conviction.
That actually fits the current feeling quite well, that sort of grinding, uncertain action. What specific data supports this seller exhaustion idea, especially after such a sharp drop?
They point to a metric called the cumulative volume delta, or CVD, specifically for the futures market.
Okay, what does CVD track?
CVD basically tracks whether buyers or sellers are being more aggressive at market prices. Is buying volume hitting the ask price, or is selling volume hitting the bid? And the key finding here is that the futures market CVD is showing that speculative selling pressure is diminishing.
Speculative selling pressure. Diminishing. Why focus on the futures market speculatively?
Because the futures market is where the leverage lives. It's where the hot money plays, where those big liquidations like the $700 million happen. It represents the more impatient, often more panic-prone segment of the market.
The ones who drive those sharp moves.
Right. So when their selling pressure starts to fade, even as the price is low or dropping, it's significant. It suggests those aggressive sellers, the short-term traders, are running out of ammo.
They've either been forced out through liquidation or they've taken their positions off the table.
Precisely. Now, CryptoQuant is careful to note that the spot market sentiment, people buying actual Bitcoin to hold, is still, quote, a bit pessimistic. So we're not seeing a surge of strong buying yet.
But the key is the lack of aggressive selling.
That seems to be the core insight. The lack of intensifying selling pressure from the speculative side, even after breaking a major level like $100, is the main indicator that suggests seller exhaustion.
So despite the fear in the headlines and the price drop, there isn't a wave of genuine panic selling hitting the market. The people who are going to panic and sell their long-term bags maybe already did.
That's the implication. It suggests that the holders remaining are likely the longer-term believers, the ones less likely to be shaken out by short-term whale games or price dips. This process is often described as the market changing blood. Weak hands are flushed out, and ownership consolidates into stronger, more convicted hands. That's textbook bottoming phase behavior.
That's a really important perspective shift. The macro data suggests the fuel for a deeper crash, widespread panic, might actually be drying up, even though the price action feels scary.
And Sunny Mom's conclusion really sums up this whole situation. Since sellers seem exhausted, and we're likely in this grinding bottoming phase, the market is essentially coiled, waiting. They believe, quote, just a little bit of good news is enough to ignite the next rally.
A spark. Just needs a spark. Wow. Okay, so we've gone from the chaos of that $700 million liquidation cascade through the sophisticated trickery of things like that $57 million spoofing wall. And now we land on this broader idea that the market might be structurally tiring out the sellers, even if it doesn't feel like it day to day.
A fascinating journey through different layers of market analysis.
It really is. So the big question then is, how do you listening take all this complex information and apply it? How does it inform your own approach, your own strategy?
Great question. I think takeaway number one has to be about recognizing the psychology and the cascades. That $700 million liquidation number.
$100.000. Wow, một con số mà cả thế giới crypto đều nín thở chờ đợi. Nhưng mà lạ một điều, khi Bitcoin gần như chạm tay tới cái ngưỡng cửa thiên đường này rồi, thì tại sao mọi thứ lại sụp đổ? Hôm nay, chúng ta sẽ cùng nhau giải mã trận chiến khốc liệt đằng sau con số $100.000 này.
Cái con số $100.000 ấy, ban đầu nó chỉ là một giấc mơ xa vời thôi, đúng không? Dần dần, nó trở thành một mục tiêu cụ thể. Và rồi, nó biến thành một trận chiến thực sự. Bởi vì thị trường không bao giờ đi theo một đường thẳng cả.
Vậy thì, câu hỏi lớn nhất ở đây là, tại sao? Tại sao sau khi gần chạm tới đỉnh vinh quang như thế, thị trường lại đột ngột quay đầu lao dốc? Rốt cuộc thì, điều gì đã thực sự xảy ra đằng sau cái cú hích tưởng chừng như là lịch sử đó? Thử hình dung thế này nhé, thị trường lúc đó giống hệt một trận kéo co khổng lồ, và cái vạch ranh giới chính là mốc 100.000 đô la. Một bên là phe mua, dồn hết sức kéo lên, bên kia là phe bán, gồng mình kéo xuống, và khoảnh khắc phố vừa mở cửa, bùm, phe bán tung ra một đòn chí mạng, kéo tuột giá ra khỏi cái mốc cực kỳ quan trọng này. Và cái cú giật đó ấy, nó không chỉ đơn giản là một cái vệt đỏ trên biểu đồ đâu, không hề. Nó đã kích hoạt một làn sóng, phải nói là tàn khốc. Áp lực dồn lên phe mua bỗng trở nên không thể chịu được nổi, và một thứ mà người ta gọi là thanh lý đã bắt đầu. Mọi người nghe không nhầm đâu, 700 triệu đô la chỉ trong vỏn vẹn 24 giờ đồng hồ. Đây không phải là điểm trong game, đây là tiền thật, là hy vọng, và có lẽ là cả nỗi đau của hàng ngàn nhà giao dịch. Vậy thanh lý chính xác là gì? Nói một cách đơn giản nhất nhé. Khi các nhà giao dịch vay tiền để cược là giá sẽ tăng, nhưng mà đời không như là mơ, giá lại giảm mạnh, thì hệ thống sẽ tự động bán tháo tài sản của họ để trả nợ. Đó, 700 triệu đô la đã bị thổi bay chính xác theo cách đó. Chuyện này, nó đặt ra một cái nghi vấn rất lớn. Liệu đây có phải là một phản ứng tự nhiên của thị trường không? Hay là có những tay chơi lớn, những cá voi đang ở đâu đó giật dây, điều khiển toàn bộ ván cờ này? Giới phân tích thì gọi thẳng đây là một trò chơi săn thanh khoản. Nghe ghê đúng không? Những kẻ săn mồi, hay chúng ta vẫn gọi là cá voi ấy, họ biết rất rõ các nhà giao dịch nhỏ lẻ đặt lệnh ở đâu, và họ cố tình đẩy giá về phía đó để đi săn. Cái chiến lược này nó có hai mặt. Cá voi có thể đẩy giá xuống để quét sạch những ai đang đặt cược giá lên, hoặc ngược lại, họ đẩy giá lên để xử lý những người đang đặt cược giá xuống. Dù đi theo chiều nào thì lợi nhuận cũng chảy về túi họ cả. Và đây là một minh chứng không thể sống động hơn. Ngay khi giá vừa chạm mốc 99.000 đô la, boom! Một bức tường mua trị giá 57 triệu đô la đột ngột xuất hiện. Nó giống như một tấm khiên khổng lồ được dựng lên để bảo vệ mức giá này vậy. Nhưng câu hỏi là, đây là một tấm khiên thật hay chỉ là một cú tô láo trong một ván poker khổng lồ? Có phải đây là một động thái để tạo ra cảm giác an toàn giả, để lừa người khác mua vào, trong khi chính họ lại đang âm thầm bán ra ở phía sau? Rất có thể, đây chỉ là một vòng nữa của cái trò chơi săn thanh khoản mà thôi. Ok, vậy tạm gác lại mấy cái trò chơi của cá voi đi. Giờ chúng ta hãy nhìn vào các dữ liệu kỹ thuật thuần túy. Nhưng mà oái oăm thay, ngay cả ở đây, bức tranh cũng chẳng hề rõ ràng chút nào. Với những